Hello everyone, thanks for joining us today and welcome to this educational presentation of risk-reward ratio done right. Now a lot of traders really put a great emphasis on risk-reward ratio, on how much they're going to make potentially per trade as opposed to how much they're risking. And I'm going to give you two simple edges today that will be able to increase your risk-reward ratio regardless of what strategy you trade, regardless of what market, and regardless of what time frame. So this promises to be a great educational presentation. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And in conjunction with my sister site, Pro Trader Strategies, we are first and foremost about educating you. That's where we're a little bit different from other presentations or webinars or websites, in the fact that our only goal is simply to educate you with things that I've accumulated in my 4-decade career. Because it's our philosophy, our understanding that the reason why most traders fail, it's been estimated upwards of 80, almost 90%, is because they're not properly educated, and therefore most traders will take their trading signals or trading decisions from someone or something else. In my opinion, what I've seen in 40 years, that's a recipe for disaster, and that's why most traders fail, because they're taking themselves literally out of the game. Now, I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist. That's where we get the name Specialist Trading. A specialist was simply a trader on the floor who made markets. I made markets in about 50 stocks. So if you wanted to buy or sell that particular equity or that issue, you had to go to the trader who made a market in that, who actually bought and sold those particular shares. I did that for, as I stated, 9 years on the floor. I was a specialist. I traded through the crash of 1987 and the bull market that followed. And so I've been involved in just about every market environment and just about every strategy or system I've traded, every environment and every type of conditions. And I know what works in terms of consistency, and I know what doesn't. So I left the floor in the mid-90s. I traded on my own. I also managed money. And about 8 years ago, I teamed up with Pro Trader Strategies, and we formulated Specialist Trading, where all we do is devote all of our time to educating you as a trader so that you can ultimately put yourself back in the driver's seat and make your own trading decisions. So as you'll see here in just a few moments, we're going to educate you today by giving you some great edges you can start using as soon as this presentation concludes. And we're all about hopefully elevating your trading to the next level. But before we begin, as always, we are required to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these two edges to increase your risk-reward ratio. But please remember that we can in no way guarantee that any of these results I'm about to share with you will be repeated in the future. So once again, we're required to show you this prior to each and every presentation we give. And as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there. That's abbreviation for Specialist Trading. It's at SPCLST. TRADG. If you go there, you'll find that I post information on a daily basis, anywhere from signals our strategies have generated to little bits of wisdom along the way. So it's lots of great free information, and I'd love to have you follow us on Twitter. Okay, as I stated earlier, we are simply an educational company. That's our sole purpose. We're not here to force feed you signals. We're not here to tell you what the perfect market is. I mean, I almost get this question on a daily basis. Steve, what market should I trade? What's the best time frame, or what's the best strategy? These are some things that you must find out on yourself. Now, we provide you with all of that. We have strategies that generate signals. We have methods, techniques that'll work in every market, every time frame, any direction. But we're not going to tell you what the one is for you to trade, because we feel that no two traders should ever trade alike. That's why we don't believe in chat rooms or trading rooms, because traders will turn these into crutches. If you go into a room and you start seeing what people are saying or start trading the way other traders are trading, once again, what have you done? You've taken yourself out of the game. You're basically telling the markets, I don't know what to do. I don't know how to do this. I don't believe in myself, so I'm going to let you make the decision for me. And I can't think of a better way to lose money than to do that. I mean, think of it. What other profession would do that? Say there was a doctor or a brain surgeon. Would he be on the operating table saying to his assistants, what do you think I should do now? What do you think about this? What's the proper way to execute this? I'm not sure if I know how to do this. But Traders do this on a daily basis. Think of how you make your decisions, how you manage your money, what market you decide to trade, what time frame. As you see here, my goal is not to force feed you signals. My goal is not to tell you what to trade and how to trade. My goal is to teach you, provide you with all the things that have stood the test of time, things that I've accumulated in my 40 years of trading, things that I currently use myself in my own personal trading, and then mentor and work with you along the way so that you can pick and choose what feels best for you. That is what I've discovered. That's the great truth about trading, that no two traders should ever trade alike. You should be in charge of your own decisions. So this is what we do at Specialist Trading, and hopefully I'll be able to change your trading and use the same things that have been able to sustain me for 40 years will be able to sustain you as well. Now today I'm going to give you some great techniques and edges in the terms of money management so that you can apply this to virtually any strategy you're trading, any method, any time frame, and any direction, okay? And once again, you can start using this as early as the next hour once we conclude. Now the only prerequisites I have is that if you have any questions, as I know many of you will later on, please wait till the very end of today's class to ask any questions. This will be educational, so we're going to hold this as if it's a classroom. And so if you have any questions, many times your question will be answered on the very next slide. I'm going to show you a lot of examples, lots of slides, and we're not going to concentrate so much on current charts because I want you to understand this concept or this philosophy. So it doesn't matter what market and time frame we're looking at or how old these charts are. What matters is that you understand the concepts and then you can start applying them to real-time charts. So once again, if you have any questions, please wait for the next 30-35 minutes, and once we've concluded, then I'll take all of your questions. The only question I will answer right now, and that is, most people ask, is this being recorded? Yes, it is. We record all of our presentations, so if you're having technical difficulty, if you can't see or hear the screen properly, try logging off and then logging back on. But if it still doesn't work, don't worry. Pro Trader Strategies will provide you with a link to this recording, or if you have to leave early. So just contact them at the end of the presentation. And once again, all of our presentations are recorded, and we will have a recording for you. Okay, so once again, kindly wait till the end to ask any and all questions, and let's begin. Now, here's what you're going to learn today in today's class. We're going to talk about an acceptable risk-reward ratio. We're actually going to go into the definition of what that is. Many of you might not even be aware of what risk-reward means. And then we'll talk about a low risk-reward ratio, what a lot of people trade with, which really isn't acceptable in many people's eyes. And then we're going to give you two edges. The first one is designed to increase your risk reward based off of an entry, all right, proprietary entry technique that I learned on the floor. And then lastly, we're going to give you the second edge, which is a way to increase your risk reward, which is based off of your exits, which once again is coming from something that I learned on the floor some 35, 40 years ago, which I'm going to be sharing and revealing to you today. All right, so lots of great information here. Let's begin. Let's start out with the standard definition for those of you who aren't familiar with what risk-reward really is. And here's its standard, common, traditional way of explaining it. Risk-reward is a ratio used to compare the expected returns of an investment to the amount of risk undertaken in order to capture these rewards. Now, I know that's kind of complicated, kind of wordy, but let me just show you what it means in a most basic. It's a calculation. It's basically reward simply means where you enter and where you hope to exit with a profit. The number of points or amount of pips, whatever market you're trading, that is going to equal your reward. From where you enter a trade to where you hope to exit with a profit. That's the amount of points you have, all right? Whereas risk equals where you enter into a trade, and if you're stopped out with a loss, how much are you risking? What amount of points is that, all right? If you divide the amount of points or the expected profit by the expected loss, or the amount of points if you were to lose, that equals your ratio, okay? Now, let's explain it even further with an example, a very simple example here. Let's say you purchased 100 shares of fictional XYZ Corp at 20, okay? Let's say your brother-in-law told you it's a great buy. Let's say your friend down the street loves it and he thinks it's going up. Let's say you have inside information. Absolutely makes no difference what it's based off of. But let's say you buy 100 shares at 20 and you place a stop loss order, a mental stop, at 15. Okay, so that basically, if you're wrong, you're going to exit with a risk of 5 points. Okay, that's where you're going to be getting out if you lose 5 points. So if we see it, what this looks like in a fictional chart here, you're going to buy roughly at 20, which is roughly right here, and you'll place your stop or mental stop wherever you want, 5 points lower at 15. So you know if this trade doesn't work out, if your brother-in-law is wrong, or if the information you've been given is wrong, or the strategy you trade that generated a buy signal in XYZ Corp is incorrect, this is where you're going to be getting out, okay? All right, that's the risk of 5 points. Now, let's also assume that you believe the price of XYZ will reach 30 in the following months. This is where you think it's going to go, where your system, your strategy, or your friend tells you it should go up to. All right. So in this case, you're willing to risk 5 points. Remember, you want to get out at 15 if you're wrong, in order to make an expected return of 10 points, because you're buying at 20 and you want to get out, hopefully 10 points higher at 30. So if you're purchasing right here, your stop is in place. This is where you want to exit. All right. Now, since you stand to make double the amount that you've risked, well, this trade would be said to have a 1-to-2 risk-reward ratio. In other words, you're risking this amount to make double the amount, which would equal 30 or 1-to-2 risk-reward. All right. You see, in its most basic form, for those of you who aren't familiar with this concept, this is what risk-reward ratio is, and this is an acceptable risk-reward ratio because over time it's been said that if you have a strategy that is anywhere correct, anywhere from 33 to 40% of the time with a 1-to-2 risk-reward ratio, even if it's only right a third of the time, basically, you'll still make money. Can't predict how much, but you'll still be all right. But you have to make sure and know that it will at least generate profits and work with a 1-to-2 risk-reward ratio, at least a good third of the time. All right? Now, here's the trouble. If you are trading a strategy or a system, many times this strategy or system tells you in advance where to get out. This is what's called a fixed exit. In other words, prior to entering, based off of the method, based off of the trading plan, where you should be getting out. All right, so this is telling you where to exit, and oftentimes it's in conflict with your risk amount. Let me show you what I mean here. Here's an actual strategy based on one of the ones that we teach and we promote. And this is on a weekly chart of Apple, an older chart of Apple going back a year or so. But it still stands to reason. Remember, we're just trying to teach you the concept, so it doesn't matter when this happened. Here is what we call the setup bar, right here, circled in blue. And this is where you should have gotten long. Based off that, you would have entered on the next week, and you would have purchased at 113, okay? Which actually did happen if you're trading this on a weekly basis. Now, your stop would have been just below that setup bar at 105. So you're risking basically 8 points. And here's the trouble though. Your exit is fixed, and the exit said you should be getting out of the trade at 121. So that's a profit of 8 points. So basically you're risking 8 points to make 8 points, and this worked very well. But you made only 8-point profit, and in the risk-reward ratio, this is called 1-to-1. You're risking the same amount that you hope to potentially make. Now, at Specialist Trading, we have very high consistency in our trading methods. Nothing is statistically measured, but we have seen over time that anywhere from 55 to 60% of the time, a lot of our strategies generate gains. So that's very consistent. So with a 1-to-1 risk-reward ratio, you will over time do well. But because of the way people are trained, because of the way people have been taught in trading, they say, well, Steve, I just can't trade with 1-to-1. I've always been taught that that's incorrect. I need a higher risk-reward ratio. Even if this generates profitable trades 60% of the time, I don't want to be trading this because it's really, it doesn't feel correct for me to be making the same amount that I'm willing to lose. I have this feeling that over time, I'm just going to break even. Okay, so how can we increase this? All right, here's our first edge. This is edge number 1. You can control the risk-reward ratio of any trade by simply altering its exit point. See, so many people think, well, these strategies only generate 1-to-1 risk-reward ratio, so I've got to throw them away. I'm not going to trade them. It doesn't matter if it's a good strategy, you can still get a very high risk reward ratio by altering its entry. So you don't have to throw away the strategy. You don't have to say, well, you know what, I'm not going to trade this. I'm going to trade something else. Let me show you what I mean here. This is a technique I learned on the floor, and it's based off of this bar right here, which we call the setup bar. This is the bar where we had all the requirements come into play. This is the bar where everything happened all at once and we knew that we were going long. Now, it doesn't matter, once again, what it's based off of. Our strategies are based off price, are based off a few indicators or price patterns. It doesn't matter, though. It could have been based off of news, all right? Your strategy or system can be based off of the tides of the ocean or the full moon. It absolutely makes no difference as long as all the requirements are met. The bar that generates the signal is called the setup bar. So here's what we want to do. We want to take that setup bar, regardless of what the requirements are, and measure it from top to bottom, okay? From top to bottom. And then what you want to do is, once you figure out the amount of points or pips, regardless of what market you're trading, you want to simply divide it, okay, by 4 separate but equal quarters, or 25%. All right, and so what you want to do is, instead of buying the next day, once it goes above, in this case, against the previous bar's high, what you want to do is simply take the first quarter, this is our first edge, and you're going to subtract 25% of this total range, okay? And that's where you're going to place your limit order, down here, down 25%, okay? So now, as you can see here, we opened up a little higher, went a little higher, and then started to fall down lower. So instead of purchasing up here at 113, we now purchased at 110. And this, right off the bat, decreases our risk. So before, where our risk was 8 points, now if we bought at 110 and our risk is at 105, our stop remains at the same place. Well, now we're only risking 5 points. But because we've added that, we're selling at 121. Now we have a chance of making 11-point profit instead of 8. So in other words, we are risking 5 points to make 11. Same exact strategy. All we've done is alter our entry point. And now, instead of a 1-to-1 risk-reward ratio, we have basically a 1-to-2 risk-reward ratio. All right? Which is much better, makes you feel a lot more comfortable. You haven't thrown away the strategy and said, well, I can't trade this. It doesn't work anymore. You've simply altered your entry point, all right? And you've increased your risk reward. So instead of making 8 points, the trade was still a winner, and you now made 11 points. And instead of risking 8, now you've gone down to risking only 5 points. See how that works? But we haven't stopped there, okay? Now, another thing I want to mention, now with a 1-to-2 risk reward ratio, instead of having to be right 50 or 60% of the time with a 1-to-1 risk reward ratio, we only have to be right a third of the time to get to make money with a 1-to-2 risk-reward ratio, okay? But we haven't stopped there. What if we want to have an even better risk-reward ratio? Well, we still have measured the top of the bottom, but instead of placing our limit order down a quarter, we're going to place it down 50%, okay? Down half the distance of this setup. So now we are going to place a limit order to buy at 108. Remember, in this formula and calculation, we don't change the stop. The stop stays the same. We're just changing our entry. But our entry was originally at 113. We went down to 110. Now we're going down to 108. Okay? So now we are only risking 3 points. Okay? So you see how that works out? Instead of buying it at 113, we're now buying it at 108. All right? Now, here's the beauty. We've dropped our risk down to 3 points, but now we're having a profit potential of 13. So we're only risking 3 to potentially make 13. That's now a 1-to-4 risk-reward ratio. And I believe you only have to make anywhere from 15 to 25% to be correct using this ratio to be profitable and consistent. Okay? So you see how this works now? But we can take it even a step further. Remember, we went down and originally 25%, we went down 50, we can go down 75% and place our limit order at 106, where we would have been filled right down here. And now we're only risking 1 point to potentially make 15. So our risk reward ratio is 1 to 15, a fantastic risk reward ratio. And we only have to be right about 5% of the time if we have this risk reward on all of our trades. Here's the only caveat, though, with this technique. It's a great technique. It's a great way to increase your risk reward, to decrease your risk and increase your reward ratio. But the more you go down this scale, all right, if we go down 25%, you'll increase your, or I should say, you'll decrease your chances of filling the order many times. Not a lot, but you're not going to get as many trades as if you just simply bought at the market or waited for price to trade up the next day. And if you go down 50%, they'll decrease your chances of getting into the trade will decrease even more. And ultimately, if you place a limit order down 75%, you have very small odds of entering into that trade because oftentimes it will not reach there. So you have to know this in advance. I would say a good place to start out is down 25 to 50. If you want to trade placing your limit order down 75%, that's fine, but you're not going to get a lot of trades. You're going to get a moderate amount at down 50%, and you're going to get an okay amount down 25%. So always paper trade with this first to see which method or which technique for entry works best for you. But please remember, you're not in any way changing the stop. The stop will always stay the same. All we are altering is our entry point. But simply by changing our entry based off of that setup bar, the bar that all the requirements were met, where everything fell into place, you simply measure that from top to bottom. That tells you where you place your entry. Okay, you're not going to simply buy at the market. You wait and place your limit order down lower. Okay, let me show you some more examples of this. Here's a sell order in TGT. Okay, here's where our stop is going to be at 84 1/4. Here's where our entry would be the next day. All right, now had we entered right here, we're going to enter to go short at 82.75, and we're placing our stop at 84 1/4. Here is our standard mode of exit right here. Remember, this is based off of a fixed exit, and we stand to only make 1 point. All right, we're going to sell short at 82.75, buy at 81.75. Okay, and as you can see, in 2 days, we had a really nice trade. Here's the trouble. We risked 1.5 points to make just 1 point. So we were risking more than our reward potential was. All right, now it's not a very good risk reward ratio because over time you actually won't make money. You're going to have to be correct 60 to 70% of the time in order to make money using this. Okay, so we need to increase this. Let's say we measure the setup bar again. Here is the bar where all the rules came into place, where all the requirements. We're measuring from top to bottom. Okay, and this time we're going to subtract whatever that 25% is right here, and this is where we're going to place our limit order to go short at 83 1/4. So now we're only risking 1 point to make a potential 1.5. Still a little bit better, okay, much better risk reward ratio, but still it's not that good. Remember, the benchmark is 1 to 2 risk reward. So what would we have to do? We would have to still go further to the half point, to 50%. And in this case, we would have done it. We would have gone short at 83 1/2. And now our stop is still the same at 84 1/4. So now we're only risking 75 cents, 3/4 of a point, in order to make 1 3/4 of a point. So that's roughly 1 to 2. So that's much more acceptable. All right. So this is where it would be the most advantageous place to enter this order here. Not, off a market or limit down here, a stop sell, but simply based off of the 50%. That gives you the adequate risk reward. So this is the beauty of this technique. You'll know in advance if you have an adequate risk reward ratio with your strategy, and then you can simply adjust it to meet your needs. You don't have to take the trade the way it's designed. You can take this technique, edge number 1, and decide where you want to enter. Remember, we said at the very beginning, the reason why most traders fail is because you're making your decisions based off of what someone or something else is telling you what to do. In this case, it's the system or the strategy. Well, remember, you don't have to do that. Our entire goal is to put the power back in your hands by supplying you with this information that has stood the test of time so that ultimately you can make your own trading decisions. You can decide what type of risk-reward ratio you want. You don't have to trade the system the way it's been taught to you and the way someone sold it to you and said, this is the way it has to be each and every time. You can't alter it. It's got to be the same way. We don't believe in that. That's a recipe for disaster, in my opinion. So here's one way to be in charge of your own trading. Now, let's say you wanted an even better risk-reward ratio. Well, here's what you have to do. Go to the 75% level, which would be roughly right here. That's 75% from the low of the setup bar, and you will be selling at 83 and 75. You'd basically be risking half a point in order to make 2 points. So that's 1 to 4 risk reward ratio. Much, much better, and you would have gotten able to fill that. I know a lot of you are probably thinking, remember, we'll take the questions at the end. I'm not going to take any questions now. If you happen to come in very late, we'll only answer questions at the very end. But I know a lot of you may be thinking, well, Steve, I trade options. That's okay. All you have to do is say, I'm not going to enter until price hits this 75% or 50%, and that's where I'll purchase my puts or enter into the spread, whatever I'm trading. So it doesn't matter what you're trading. You don't have to trade the stock. You can easily do this with options. These are just guideposts of where you'll enter into whatever trading vehicle you decide to enter, okay? All right, let's show you some more examples. Here's a great example on the diamonds. That's the ETF for the Dow Jones Industrials. Now, let's just say this is your setup bar right here, okay? Your stop is going to be down here. Now, if you entered at this point on the next day after the setup bar, here's the setup bar right here, all right, you've actually would have been in a profitable trade because it did go up to your point of exit. But look how much you were risking. You were risking a lot more than you wanted to actually exit with a potential profit. So this would have been a very good place to use this technique. This is the setup bar. Rather than just simply saying, I'm going to enter at the market, you could have entered down 25%, down 50%, and down 75%. You see how simple this is. All you have to do is measure from top to bottom. For those of you who are confused on this, whatever day or whatever bar, it could be a 5-minute bar, but whatever bar, all the rules of the strategy or system or method you're trading come into place. Let's say it's based off news. Let's say it's the day some announcement came out. All right, the close of that day, you measure the top and bottom of that bar and divide by 4 separate but equal parts. All right. If you're going long, you would simply enter an order here down 25%, down halfway of the bar, or down 3/4 of the bar if you're going long, okay? Now, here's what a lot of students say. They say, Steve, I love this technique. For the first time, I feel confident about trading a lot of methods and strategies because I'm getting in at a better price, and I've really learned how to control my risk. I'm in charge of my own risk for the very first time. I don't have to listen to some system or some strategy. Here's the only problem. A lot of times I'll use this. I'll get out with a 1 to 2 risk reward ratio, sometimes even a 1 to 3 or 1 to 4, but then this will happen. And even though I had a nice profit, I wind up leaving so much money on the table, okay? A lot of times I wind up and there's just, so much profit I could have made here. So how can I increase my odds for, potential big profits even more, okay? Well, this brings us to edge number 2. And edge number 2 is simply, you can control the risk-reward ratio of any trade by also altering its exit point. Now, in edge number 1, we altered the entry. Okay, the entry was what we altered by placing our order down 25, 50, or 75%. But now we can also control the risk-reward by altering the exit. But how do we do that? I mean, how do we know what the exit is going to be? I mean, sure, anyone can say, well, I'm not going to sell up 2 points. I'll sell up 20 points. Okay, and I just created a great risk-reward ratio. That's not what we're talking about. We're not talking about simply guessing and picking a number. Okay, you're not going to say, well, I'm going to sell it up 100 points. Okay, I hope it gets there by next week. That's not the point we're trying to make. We're actually going to give you an idea of how to do that by simply using a finely tuned edge here. And that's trading with the PET D. This is probably the best tool I know of for trading for these long-term trends or these large trends that you never thought of having, because this tool will simply define the trend. It's basically a translator. I learned this formula on the floor of the Pacific Stock Exchange. When I first learned this, it was something I had to calculate by hand. So it was very difficult to do in real-time trading because by the time you finished calculating it on one bar, you had the very next intraday bar. But because of high-speed computers and programmers now, we were able to program this formula into a color bar algorithm. So all you have to do is look to see what the algorithm is coloring the bars. If you see a series of green bars, the PET D is telling you that the trend is up. Conversely, a series of red bars tells you that the trend is down. So how can we use this? All right, well, here's the example here. This is actually another one of our strategies here to go long. This is KSS, an older signal here, but using one of our strategies, strategy number 4. Now, as you can see, you couldn't have really used any one of the entry points because it never really got down 25, a full 25 or 50 or even 75%. So here you would have missed that chance altogether to alter your entry. But had you used a standard entry of just saying, let's say, buy in the close or buy at the market, well, you would have had a very nice trade here. But how could we increase our odds for success even more? We add the color bar tool. And now you see that the color bar tool, once we get in the trade, it has colored all of these bars green. So this is what we're looking for. We're looking for all of the bars to remain green. Why? Because our translator, the PET-D, is telling us that we're still in an uptrend. And so if you're going for that big profit and holding out for as much gain as possible to squeeze as much profit as possible, you don't want to exit too soon, right? You want to ride it as far as you can. But it's difficult. How do we know how we can ride it? When do we get out? Well, the PET-D will tell you you are in an uptrend as long as it stays green. So right here, you're saying, wow, I've had a great profit. Boy, I think I should exit now because it looks like it's kind of topping out right here. In fact, it's even going lower. So if you didn't have the PET-D, you would probably sell here for a nice gain. But what color is the PET-D? The PET-D is still green. So the PET-D is saying that uptrend has not concluded. The best thing would be to continue to hold on. Sure, you can sell a portion of your position, but hold on, because look what happened. We continued to go higher, and while we were going higher, even though we had these small dips, the PET-D was still coloring the bars green. And right here, let's say you say, well, Steve, boy, one of the chat rooms I go to says there's some major resistance right here. I've got to get out. Or this is where all the institutions are selling, right? I got to get out, right? I've got to take my money and leave. Listen, you can always trade however you like. It's not our philosophy to tell you how to trade. But it's our philosophy to say, don't make your decisions based off of anything other than the market you're trading. And the PET-D is simply translating what the market wants to do. It's not telling you what to do. It's not telling you to buy or sell. It's just translating that the market is saying it wants to go higher. It's not some institution selling, telling you that you should sell too. Or it's not some guru in a trading room or a chat room telling you that we've hit major Fibonacci resistance. It's the market simply telling you, well, the market is being translated that it wants to go higher. So you wouldn't sell yet. Maybe you could sell some more of your position if you wanted to feel comfortable, but you wouldn't exit everything yet because, well, guess what? The bars are still green. So you see how beautiful the PET-D keeps you in these long trending moves here. Now, as we roll over, what do we find here? Here is our very first red bar, okay? So now, what is the market telling us? Not some guy in a chat room, not some guy on TV, not some earnings report. What is the market we're trading telling us? It's telling us that there is a big sign here that potentially the trend has changed because we changed color. So this is where you want to place your stop. If you're more aggressive, you may want to just simply exit at the market. But if you're more conservative, you just place your stop somewhere below there, and it would have been a good idea because ultimately we started to go lower, okay? So you see how the beauty of the PET-D, it will keep you in these trades a lot longer than other techniques or methods or listening to outside sources. Why? Because the PET-D only listens to one thing. It listens to what the market wants to do, and on a tick-by-tick basis, it comes up with a calculation saying if we're still in an uptrend or if the market is still in a downtrend. That's all it's doing. It's not telling you what to do. Let's look at the sell order in HCN. Once again, this is another one of our strategies. I believe this is a strategy number 5, sell order. Okay, now if you'd taken this trade, you would have had a very nice profit, okay? But let's say you wanted to sell a portion of your position down here, but you also wanted to go in for that long profit because you thought maybe this stock is going to go much lower. Well, let's see what the PET-D says. Well, the PET-D confirmed this by being red, and it's been red the entire time, and here is our first green bar. Remember, once again, if you see a green bar, it doesn't necessarily tell you the trend is changing. But in order to be, prudent, you would want to place a stop just above there. Okay? Now, if you're more aggressive, you can just simply say, I'm out. I'm going to take my profits and leave. But sometimes that won't work because it's better to place your stop above there because look what happened right after that. We never went above, and we continue to go lower with red bars, okay? So it would have been good just to place your stop above. But what have we met with here? We have another green bar. So we're going to lower our stop down to here, and at least we captured a few more points to the downside if we start to go up. Let's see what happened. The PET-D still kept us in. And now we have another green bar. So we can lower this stop and track it all the way down. And now here's our stop order. Okay, do you see how we're just tracking the trade down? We're in no way telling the market, well, you're going to stop here. We're picking the bottom, because the PET D doesn't do that. It doesn't pick tops. It doesn't pick bottoms. Once again, it simply translates on a tick-by-tick basis what the market wants to do. So we're just following it, all right? So we lower our stop once again, and it continues to go lower. Do you see how the PET D has kept us in this trade all the way down here, okay? So this is what we advise our students. We say, listen, wherever your initial exit is, it's good to get out and take some profits and move your stop to unchanged, but then you can track it with the PET D the remaining portion of the way down, okay? Here's a 5-minute chart, all right? Doesn't matter if you're trading intraday or if you're trading daily bars. Here's another signal of one of our strategies. I believe this is strategy number 4. And here's the PET D, green once again. We're in the trade the entire time. Here's our first red bar, okay? So you're always free to sell if you want to on that red bar, or place your stop just below it. And in this case, it's a good idea. Either one would have worked well, because look what happened. The PET D signaled well in advance, well before the market fell out of bed on a 5-minute time frame, that it was going lower. So you see how sensitive the PET D is. Well before this sell-off, it was telling us it wanted to go lower. So we got out and we captured a lot of profit. How about if we use this on range bars? Here's another example on the E-mini futures. Here's a 3-point range bar, okay? This is another one of our setups to go short. Now, we had a really nice movement to the downside. How would we have known how long to stay in this trade? Well, you apply the PET D, and once we entered short into the trade, look at all the downward red bars. Here's our first green bar. You place your stop above, followed by more red bars. So it would have kept us short a long, long time in this trade. Lastly, let's look at an example, an order chart here of the euro-yen. Here's another one of our strategies, strategy number 4 again. And as you can see, we had a really nice trade here. And even though the PET D didn't get us out at the top, it's not designed to do that. Remember, it's not telling us how far something will go up. It's not a predictive tool. It's simply telling you at the moment what the market wants to do. Now, at this moment, the market wanted to go higher, but later on, it decided it wants to go lower, and that's where you would have exited. Now, here's a weekly chart. Same exact concept, except to the downside. It kept us in this entire time, going short the Australian dollar until it got us out right here when the bars changed, okay? So let's review before we go to the question and answer portion of this presentation. Remember, you can control the risk-reward ratio of any trade, of any strategy, of any system, of any technique, simply by altering its entry point. In other words, there is no reason, if you study a method or you purchase a method or strategy and it has basically a 1-to-1 or 1 to 1.5 risk-reward ratio, there's no reason to throw it out the window and say, this doesn't work, I'm not going to make any money, I'll just break even. You can alter it by changing your entry point. And the way you do that is find the bar, whether it's a tick chart, whether it's a monthly bar, a daily bar, where the rules were all met, where all the requirements came together and were met. That's called your setup or your signal bar. You simply want to measure the range. If this was a buy order, measure the range from top to bottom. It could easily be a candle bar. It doesn't matter. You measure the top of the wick to the bottom of the wick. It makes no difference. And you divide by 4 separate equal parts. So if you're buying, you place it down 25% of the range. That would be your first initial entry. Or you could be more moderate and place it down 50%. That would be half the distance of the range from top to bottom. Or if you want to be more conservative, you'd be down 75%. Remember, your risk parameters stay the same in terms of your stop placement. It's only your entry point that is altered. Edge number 2. Once you're in a trade and you want to capture those large gains where you feel like, boy, I'm really throwing in the towel here by giving away so much money. I'm leaving a lot of money on the table here. I could be doing fantastic with some of these strategies, but I'm just getting out too quickly. Well, you can control the risk-reward ratio of any trade by altering its exit point. And what is, in our opinion, the best way to alter an exit point? Stay in the strategy, stay in the trade as long as possible. And what's the best way to stay in the trade as long as possible? In our opinion, it's by using the PET D. As long as the bars are green, you can stay in a trade until you see the first red bar. and then you'll either exit or place your stop order just below that. Or if you're short, if you got the puts, doesn't matter if you're actually trading the stock or the future. Let's say you've got the puts or you've got some spread that will increase to the downside. Just simply monitor it, and the minute you have a green bar, well, you can either cover, exit the spread, or cover the put, get out of the put, or you can simply wait to see if it trades above. That's how simple it is. Now, we know a lot of you are asking questions. You probably say, boy, Steve, this is fantastic, but I don't have a great strategy. I don't have something like the PET-D. Here's what we're going to offer all of you today for attending in our special discount. We're going to offer the PET-D, all right? This is our roadmap for literally any market. And remember, it doesn't matter if you trade the futures. It doesn't matter if you trade currency pairs. It doesn't matter if you trade commodities. This will work on any market, in any time frame, and in any direction. It's our proprietary color bar algorithm. Now, this includes the add-on. So we will furnish you with the add-on, so it will automatically change the colors of your bars from green to red in any time frame, okay? We're also going to include 2 continuation trading techniques and 2 pullback trading techniques, along with the trailing stop technique, okay? Now, I know a lot of you are saying, Steve, I love this, but you know what? I've really been burned. I've spent tens of thousands of dollars on trading strategies, on methods. I spent $10,000 on a live course where I went to someone's place and watched them trade, and I've just wasted my money. I haven't made any money, so I don't trust the strategy I trade, even with using these different entry techniques you just shared with me. I don't have a strategy that can even produce winners, 25% of the time. Here's what we're also offering. We're going to include one of our most consistent strategies to date with this package, strategy number 4. This is our most consistent strategy. We have members trading this all over the world in over 110 countries and in virtually every state in the United States. We have members trading strategy number 4. It's one of our best strategies in terms of consistency. We're also going to include this within the package, okay? All the entries, all the exits, all the rules, all the signal alerts as well. We're going to provide you with the add-on that will automatically generate up and down arrows to tell you when a strategy signal has been generated. But just for educational purposes, ultimately through my mentoring in this course, you'll be able to spot them right away, okay? But we're just giving you there so you can check your work. Here's an example of a strategy number 4 signal that was generated just this past month. Okay, as we can see here in Costco, it looks as if nothing is actually happening in this market. And that's we're going basically sideways. And most people would say, well, Steve, the chat room I go to says we shouldn't be trading this because it's in a rangy market. You never want to get whipsawed. That's how you lose money. That's the way I've been taught. Okay. And this is the way 99.9% of most traders trade. They listen to someone or something else. We only listen to one thing. That's the market in front of us. And strategy number 4 listens to the market in terms of a specific pattern. Okay. Now the specific pattern was met, and it generated a buy signal here on the 30th of January, just a little over a month ago. All right. Most people would say, why would you buy this here? This is no news. There's no report coming out. The institutions aren't interested in this stock. Remember, those are all outside influences. We don't listen to those things. I stopped listening to news 35, 40 years ago. And remember, I was making markets in 50 stocks. If you would think logically, if anyone should have known the inner workings and the earnings reports of those stocks, it should have been me, right? I'd never listened to earnings reports. I just learned how to listen to the market. That's what my mentors taught me. And once I started doing that, that's where I started to become a consistent trader, because I did all the same things that most of you are doing right now or have been taught, and it didn't work for me either. For the first 2 years of trading, I couldn't make any money. I couldn't make a dime. So my mentors taught me all the things that I teach in my courses, and that's what has sustained me. That's what's been enabled me to be trading some 4 decades now. So based off of what they taught me, strategy 4 generated a buy signal. But you know what? You want to confirm that with the PET-D. In order to take that trade, you want to make sure that that bar is colored green, that setup bar where all the rules come to place on the 30th. And guess what? It was colored green. Even though we have a couple of reds here, it doesn't matter. As long as the day where all the requirements came into place is green, that's telling you to get into the trade. And look what happened, okay? Now you think you could have applied buying down 25%, 50%, not 75%, but at least half the way down? Sure you could have. You could have increased your risk-reward ratio, and then do you think the PET-D could have really helped you had a nice gain here by staying in until the bar turned red? Now, These are two fantastic ways to increase your odds for consistency, the Pet D and strategy number 4. But guess what? We're not even stopping there. We're going to throw in another one of our most consistent strategies, strategy number 5. This is our premier candlestick strategy. It's not based off of a pattern, it's based off of a candlestick pattern, okay? So we're only looking for a specific candlestick pattern to apply to this particular strategy along with the risk-reward ratio techniques I just shared with you. In fact, if we look back here in Tesla, this was a couple of months ago in January. Now the stock had been going up very strongly, okay? And at this point, now we know a lot of people don't trade Tesla because it's a very expensive $200 stock, but you could have easily purchased calls or some type of spread strategy to the long side. Why? Because strategy number 5 generated a buy signal on the 4th of January. Okay, this was an actual buy signal generated by strategy number 5. You would have gotten the alert here. You would have gotten the add-on that generated an up arrow. Now, a lot of people say, well, boy, Steve, look at this thing. It closed at its high. How can I go long this? It's a 200-something stock. How can I buy the calls, if I'm an option trader? This is too expensive. Well, we apply the Pet D. And you think the Pet D has been well ahead of this game? Look, way back here in the hundreds, it was telling us that this is in an uptrend, well before the buy signal was generated. And it's still telling you that the trend at this moment is up. So you don't want to short it. Why not come on board? Because there's a high consistency in strategy number 5. So if you would have taken this trade, you've all seen what's happened to Tesla in the last month coming into March. And you could have purchased down 25% or maybe even down 50%. But had you simply entered on the close of this day or the opening of the next day, look how long the Pet D would keep you in this trade. So you could have used your Pet D tool to keep you in, regardless of what market you're trading. You could be trading odd lots, you could be trading the calls and say, well, I'm not going to exit until I see the first red bar or so. So you see the value of all of this. We're throwing all of these in. We're throwing in two great strategies. So if you don't have a strategy that you feel confident in, or if the strategy you're trading says, Steve, it hardly works. I'm very disappointed with the results. We're throwing two great strategies, our most consistent, strategy number 4 and strategy number 5. Included, we're throwing in the Pet D. Now, the Pet D by itself is an invaluable tool. I use it on a daily basis, all right? So this is called our Deluxe trading combo. All of these 3 things, because they will increase your odds for consistency tremendously. Now, included in this, you're also getting mentoring correspondence. You're getting someone who has been trading these methods for over 35, nearly 40 years, and who can instruct you so that you feel confident in how you can apply them to your own trading, regardless of what market, regardless of what time frame. If we sold these separately, the Pet D along with strategy number 4, along with strategy number 5, and you purchase these separately, it would cost you upwards of $5,000. Well, we're not going to charge you that much. We're going to drop this down tremendously. We're slashing this price of all these 3 things down to $29.95, okay? Included with that, all 3 of these things, we're also offering you payment plans. So for a limited time, you don't even have to come up with $29.95. You can come up with a small lump sum, work together with Pro Trader Strategies, put together a payment plan so you can be up and running ASAP, have everything all together with a small deposit, and you can still be getting mentoring correspondence with myself. Or if you'd like to pay for it all in one lump fee, you can spend the $29.95. That's still a tremendous, tremendous price. We're almost cutting it by roughly about 40%. So here's how to take advantage of this great, great deal and get your trading back on track for the first time, okay? Remember, Pro Trader Strategies is my sister site. They handle all my marketing and promoting of all my courses and all my techniques. If you want to set up a payment plan with them, the best thing to do would be to call them directly at area code 310-598-6677. Now, the link you see here below is the link that will automatically take you to the sign-up page for $29.95. But it's not a live link. You're going to have to copy and paste that onto your browser. But if you look over in the far right-hand corner in the chat box, we have posted a live link. To learn more about the Pet D and the offer, use the link below. You'll see it there, and that's live. So that will take you, if you simply click that on, it will take you to the info page. You'll get a lot more info. But I think the best thing to do, I would say the most advantageous and the best thing in terms of if you have limited funds is to contact Pro Trader Strategies. Either email them right here or call them directly. There's no obligation. There's no pressure. You can just simply call them. They'll answer any question you may have. They'll construct some type of payment plan for you so that you can be up and running and be learning under me in just a matter of time, just for a small deposit. So I'm going to leave this information up here on the screen while I open up the question and answer box. And I want to thank you all so much for waiting for the end of the presentation to hold off on questions, okay? Let's see here. A lot of people are saying thank you so much. Thank you for helping me with other setups. And David, you're more than welcome, okay? Yes, David is currently trading another technique of ours which applies Bollinger Bands. I believe that's strategy number 3. And he's going to be applying this entries and exits. And he says it's going to help him to get better entries and exits as well. Yes, this can be applied as I stated. It doesn't have to be just with our strategies. The reason why we're offering you this deluxe combo is because we know so many people are dissatisfied with their current trading methods. That's probably the main reason why you're here, because what you've been sold isn't working, it doesn't work, or it's got these huge drawdowns. Sure, it will work every once in a while, but then when it doesn't work, you give back everything you made, okay? We've just shared with you information on how to increase your odds for success with these different risk-reward ratios, but at the same time, we're giving you these great strategies which already by themselves hold high rates of consistency. So when you couple everything together with our teaching, with our education, you're really going to increase your odds for consistency. And that's what David's saying. Thank you, David. You're more than welcome. Let's see, Alan is asking, do the add-ons work some specific software? Good question, Alan. Let me share with you what charting software packages the add-ons can be applied to. Most of the major ones, so you may want to write these down. These are the major ones, and they also posted this in the chat box as well. The PET-D and our signal service can be applied to MT4, if you have MT4, to TradeStation, which is what I use mainly, Metastock, NinjaTrader, which is a large portion of our customers use NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users can use the free stock data to run free NinjaTrader chart for free. So we help you set this up because of the way Thinkorswim is set up. They won't allow us, and they don't allow not just us, they don't allow anyone to just put their different strategies and different indicators on there. So what they do allow us is to also use their data. So what we're doing is, with their permission, we're using their data and we're applying it to a free NinjaTrader platform, which we set up for you totally free of charge. In fact, we do it all for you. It's set up, usually takes no more than a couple of minutes. We have a great tech support department. Patricia at our tech support handles all that for you. And so it's all done in a matter of minutes. She does it for you. You're up and running, and then you have me as your personal mentor. So if you happen to have Thinkorswim, you can be looking at both platforms at the same time because you're using the same data, okay? It's a great way to put it together, and it's something that we really feel will help you. Paul is asking, when does the FIBO analysis enter? Well, Paul, it doesn't. We don't really apply a lot of Fibonacci, if that's what you're asking. Fibonacci is something that I know there are some traders. In fact, I know of a few who use Fibonacci. Support and resistance, pullback, different retracements. And they do quite well. But it's been my experience in nearly 40 years that the people that do well using FIBO are probably 1 or 2% of all traders, okay? The rest of us, myself included, have a very difficult time trading it because it's too subjective. I mean, it's very difficult trying to find the correct retracements. One person's retracement is another person's non-retracement, so it's just too subjective, trying to find the correct points of entry and correct points of resistance, support, Fibonacci numbers. We at Specialist Trading want things as simple as possible. We don't want two traders looking at the same chart and coming up with two entirely different Fibonacci results. And that's what happens most of the time. At Specialist Trading, once you've been mentored and taught all the simple rules, you will look at the same chart as someone else and come up with the same analysis. There's no 2 points of discrepancy because everyone is taught the same rules. And you'll be surprised at how simple they are. They're extremely simple. For example, what I taught you today. Once you learn what the setup bar is on any strategy and any method where all the rules come into place, you simply measure that from top to bottom and you divide by 4. You go down 25% for the first entry point, 50% for the next, and 75% for the third. There's no way two people will come up with different points of entry. That's it. It's cut and dry. All right. There's no different points there where someone could, well, I came up with a different calculation. It's very simple and cut and dry. That's why everyone, whether you've been trading for 30 years or 30 minutes, everyone gets the same basic rules. Okay. People are asking how much to pay a month. That's a great question, but once again, this is just a one-time charge that you put together with Pro Trader Strategies, and they design it to meet your needs. So that's why I would say the best thing to do is to contact Pro Trader Strategies. They'll see how much you have to work with, and they'll put together a payment plan with you. Okay, it's going to be different for everyone. Some people may say, well, you know what, $29.95, I can come up with maybe a majority of that right now, but not everything. Okay, well, your payment plan will be different from someone who can only come up with a minimum of that right now. So I would say the best thing is to contact them, and they can help you set that up so that you could be up and running sometimes as soon as today, and I can be answering any questions you may have. Okay. Question, how many computers to set up the pet D? Well, all you need is one, but I think if you're asking how many computers can you run that on, that would be a question probably best asked for Pro Trader Strategies, because they handle all the tech support and all of the different type of tech questions. So many times, anything that I would say has to do with teaching and actual trading of the methodology, you would contact me. Anything with tech support in terms of videos and in terms of actual how many computers you can run a specific program on, I would contact Pro Trader Strategies. That's why I say it's always best to call them first, okay? Let's see, Jerry is asking, thank you so much for the webinar. I have the program and I'm digesting the tutorials. Pro Trader Strategies has top material and my recommendation. Great, thank you so much, Jerry. That's an unsolicited testimonial there. Thank you so much. So there's another satisfied customer who's currently in the studying phase. Remember, we want everyone to study and research this first because this is an educational course. It is something so that you can learn how to ultimately do on your own. So that's the process in which Jerry is right now, and that's great. And he has my, undivided attention. Whenever he wants to email me with questions, he can do that. But right now, he's in the studying phase. So as you've noticed, and as you've seen the attention we give to detail here with educating you, we don't want to just do what so many other websites do and so many so-called educators do, which is simply throw you a system and say, we've back-tested this 10 years and it works so many percent of the time. Trust me, I've traded systems. I've even taught systems for other companies, and not one system I've ever taught has had consistency. They've all eventually blown up. And the reason I feel is because, once again, as I stated in the beginning of this presentation, it's because they take you out of the game. You see, with a system, they're rule-based and 100% rule-based. So you, regardless of the environment, if it's a crazy market, very volatile, or if it's a quiet, rangy summer market, you have to follow the rules each and every time the exact same way. All right? And you just have to be a robot. You have no say. You're not a part of the process. That's where we differ. We teach rule-based strategies, not systems. Strategies are 70% rule-based, but they allow you 30% for discretion and insight. This is where my educating and mentoring comes into play. What you saw today is the insight we're talking about. So in other words, you can decide to say, I'm going to enter at the 25% entry point. And someone else could say, no, you know what? I think there's a little bit more volatility here. I'm just going to enter at the so-called entry on the market. Whereas someone could say, no, this is a rangy market I feel here through my insight. I'm going to place my entry down 75%. To see how we're still following the rules, but we're giving you the option to use your own discretion based off of these techniques that work in terms of consistency. This is how you become a consistent trader, not by simply being a robot, have someone force feed you signals and say, buy this today at this price, sell it here, put your stop here. I mean, why even trade? It just basically, it's like someone flying an airplane saying, what do you think I should do? Let me ask the co-pilot, how should I land this? You tell me what to do. But that's the same way people trade. It's really silly. So this is what's been my experience. In 40 years, I have found that that's the reason why most traders fail. If you're having trouble making ends meet, if you're having trouble getting on that path to consistency, do some little introspection here. Look at the way you decide how to trade. Do you go to a signal service every day? Do you listen and wait for news to come out? Do you go to a chat room or a trading room or watch some so-called guru on TV to tell you what to do? This, in my opinion, is why most traders fail. What we do is the opposite. We supply you with all the information that has stood the test of time, that has shown high levels of consistency. We work with you and see what type of temperament you have, what type of risk aversion you have, and then we design and help you put together a package based off 70% of rules, but then 30% that meet your needs so that you can make your own trading decisions. It's been my experience that no two traders should ever trade alike. That's a recipe for disaster. So this is our credo. This is our philosophy here. If you're not supposed to trade alike, then how do you make your own decisions? By being supplied with proper education that has stood the test of time. And this is what we do. Once again, we have members in over 110 countries around the world. We have hedge fund traders trading our methods who've been trading 30, 40 years. We also have people that have never traded before in their lives and have just started trading in every state in the United States. I'm each and every one of those personal mentor. You can contact me whenever you'd like. All right. So the best thing I would say is contact Pro Trader Strategies. Have a good discussion with them. They can fill you in on all the information of what type of platform is the best one suited for you. All right. They can set everything up for free for you. Okay. They can put together a payment plan so that you can come up with a small deposit and still be up and running rather quickly. Okay. If you really had a terrible time trading, especially in the beginning of this year, and you want to take your trading to the next level in terms of consistency, this is a great, great package to come on board with, okay? In conclusion, I want to say thank you so much for attending today. I hope you got a little bit of education out of this, so hopefully you'll be able to start using this to increase your odds for success. But if you really want to be a consistent trader, I really look forward to you becoming a student of mine at Specialist Trading. Thanks so much for attending. I wish you the best of luck. And I look forward to you becoming a close member of ours at Specialist Trading and Pro Trader Strategies. Thank you so much. We'll see you next time. Bye-bye.